We caught up with Harsha Upadhyaya, Chief Investment Officer of Equity at Kotak AMC. Listen into this conversation.
I think from a medium-term perspective, India looks quite okay, especially in a scenario where globally most of the economies are struggling to handle inflation crisis. Whereas when you look at India, I think inflation levels are much more manageable, and also the negative real interest rates that we have today are also not as large as what some of the other developed economies have. So to that extent, I think managing interest rate hikes will be much more easier in India as compared to global. Coming to valuations, clearly we were at a very comfortable zone in the middle of June when the markets were around 15,000 to 15,500 Nifty levels. What has happened post that has been a very, very sharp pullback in markets, whereas that has not been supported by earnings upgrades. In fact, during the June quarter earnings season, we have seen downgrades to an extent of about 1 to 3% across most brokerages. So, to that extent, I would say that the recent rally has been more of a valuation expansion rally rather than led by earnings. So, to that extent, we wouldn't advise investors to make lump sum investments at this point of time where there has been a very, very sharp recent performance, as well as where the valuations are higher than fair value from an even 1 year forward basis.
All right, Harsha, let's shift the conversation towards mid-cap and small cap, because this is one area where investors, traders, everyone is sort of very much interested. What are the triggers for mid-cap and small cap for you? And specifically talking about small cap and looking at the data also, we've seen recently the inflow, if you talk about mid-cap funds specifically or overall equity, that has gone down from the investors' side, but small cap story is slightly different as compared to mid-cap. So overall, a view on mid-cap and small cap space in terms of your sector choices, your valuations, and specifically the kind of inflow that we are looking at in small cap. Is it short term? Do you think it's going to be like that for short to medium term? What's your outlook?
If you look at small and mid caps, just like large caps, at this point of time, the valuations are slightly above fair range of valuations, I would say. As far as earnings and fundamentals are concerned, more or less all of the baskets are in similar platform, I would say. There is going to be pressure due to inflation over the next 1 or 2 quarters. But beyond that, we expect the growth outlook for the entire Indian corporates to be much stronger. So when you're looking at medium-term perspective, irrespective of capitalization, I think India Inc. is looking at reasonably strong earnings growth. So what we advise investors at this point of time is if you are looking at playing the entire cycle, which is over next 3 to 5 years, for example, then taking exposure in mid and small caps is not bad. But if you're looking at next 6 months or 1 year, which should not be the case anyways if you're investing into equities, but then in that time period, maybe the large caps will remain a lot more stable, because whenever there are headwinds in the economy, small caps tend to face a lot more issues in terms of profitability and growth, etc. So in the very short term, we expect large cap to be more stable as compared to small caps. But over a medium term, we expect that the entire Indian equity basket should do much better.
All right, now so medium term outlook looks really positive and fair for India. But then, what are the themes and what are the sectors that you are focusing on currently? If you talk about the medium term perspective, which are the sectors that you are liking, and also this could be the time to put in money for long run in those specific sectors or themes.
Yes, clearly, as we are all looking at how there has been impact of inflation on the global growth scenario, we would consider Indian growth to be a lot more stable as compared to global growth. So companies and sectors which are linked to domestic economy would probably do much better as compared to some of the export-oriented or those businesses which have significant exposure to international markets. In this regard, we currently have overweight exposure on industrials, large banks, automobile, cement, chemicals. These are some of the sectors where we have currently been looking at overweight exposure. The thesis is very simple. As domestic economy continues to stabilize and start growing again at a reasonable pace, these are the segments which are closely linked to the economy, which will benefit. And the valuation is also much more reasonable compared to some of the export-oriented sectors. So to that extent, there is a possibility of re-rating in these sectors. So that's the reason for being overweight on domestic sectors that I mentioned.
Harsha, last question to you. Economically, do you think things are going to get difficult for India in the coming time? And if we talk about almost a year's perspective, if at all there is pain in the economy, how do you see us overcoming it?
Clearly, as long as crude remains at higher levels, there is going to be pressure on our economic growth as well as our inflation print. But unlike many of the European or Western economies, I think food inflation in India is going to be much more manageable. We have had a very, very steady progress in monsoon. We have got high levels of food grain stocks. We also have seen reservoir levels across India going up very, very strongly. Given all this, I think food inflation is going to be much more manageable. But as far as crude oil prices are concerned, we have no control over it. So that's something that we need to watch out for. But nevertheless, I think compared to globe, we are in a much better position to handle inflation as our interest rate and inflation differential is not as high as what you would have seen in the international markets. So to that extent, while there could be some impact of higher inflation in terms of profitability and growth for companies in the next 1 or 2 quarters, but subsequently we expect that inflation would moderate, and that should help in terms of profitability margins coming back strongly. And growth is anyways higher than what you have in global economies today, and that should also inch up as things normalize.
All right. I said last question earlier, but then I really want to ask you one question. Talking from a financial portfolio perspective now, because we spoke about large caps being strong at the moment. Do you think it's a time to rebalance your portfolio and maybe pump in more in large caps, or even if one wants to rebalance, if not this strategy, what according to you would be the right way to rebalance the current scenario for medium term?
Kavita, as you will appreciate, there is no one size fits all kind of a portfolio for investors. Everyone's risk tolerance, everyone's liquidity needs and wealth creation goals would be very different. So accordingly, each one will have to sit with financial planner and make a portfolio. But broadly, since valuations are above a range of valuations at this point of time, all we advise is there is no need to chase the momentum in the market. Rather, one should do staggered and disciplined investments over a period of time. And when you look at India from a 3 to 5 year perspective, I think India is very well placed in terms of earnings trajectory. And that's what one should be playing for. And that would be our advice to most investors.